welcome back to the channel. Today, we're diving into an important topic that can impact your financial future: life insurance in the USA. A lot of people avoid this topic because it makes them think about their own mortality, and nobody wants to do that, right? But the truth is, having the right life insurance in place can provide invaluable peace of mind for you and your loved ones in case the unexpected happens. Whether you're just starting out or looking to update your policy, these 5 tips will help you make informed decisions. Let's get into it. The first step is to understand the different types of life insurance available. The most common types are term life insurance, whole life insurance, and universal life insurance. Each has its own set of pros and cons, so it's crucial to choose the one that best aligns with your needs and financial goals. Let's start with term life insurance. This type of policy provides coverage for a specific period, typically 10, 20, or 30 years. Term life insurance is generally the most affordable option, especially for younger and healthier individuals. If you die within the term of the policy, your beneficiaries receive a death benefit. However, once the term expires, you'll need to renew the policy, often at a higher premium. Personally, I prefer term life insurance as it offers the most coverage for your buck. It's a straightforward and cost-effective way to protect your loved ones during crucial years. Next up, we have whole life insurance. This type of policy provides lifelong coverage, as long as you continue to pay your premiums. It also typically includes a cash value component that grows over time. Think of it like a permanent life insurance policy with a built-in savings or investment element. While whole life insurance offers lifelong coverage and potential cash value growth, it comes at a price. Premiums are significantly higher compared to term life insurance. Finally, let's discuss universal life insurance. This type of policy is similar to whole life insurance in that it offers lifelong coverage and a cash value component. However, it provides more flexibility in terms of premium payments and death benefit options. You can adjust your premiums and death benefit amount over time, depending on your changing needs and financial circumstances. It's essential to carefully review the terms and conditions before committing to a universal life insurance policy. Understanding the nuances of each type of life insurance is crucial when making an informed decision. Don't hesitate to seek advice from a qualified financial advisor who can help you assess your needs and recommend the most suitable option for your situation. Now that you have a good understanding of the different types of life insurance, let's move on to determining how much coverage you actually need. This is where things can get a little bit more personal, as it requires you to consider your specific financial situation and the needs of your beneficiaries. A common rule of thumb is to have coverage that's 10 to 15 times your annual income. However, this is just a starting point, and your individual needs may vary. To get a more accurate estimate, it's essential to consider factors such as your income replacement needs, outstanding debts, future expenses, and existing assets. Let's break down each of these factors in more detail. Income replacement is about ensuring your loved ones can maintain their standard of living if you were to pass away. Consider how much income your family relies on and how long they would need that income stream to be replaced. If you have a spouse who doesn't work, or if you're the sole breadwinner, your income replacement needs will be higher. Next, think about any outstanding debts you have, such as a mortgage, car loans, student loans, or credit card debt. You want to ensure these debts are covered so they don't become a financial burden on your loved ones. If you have a large mortgage or significant debt, you'll need a higher life insurance coverage amount. Future expenses are another crucial consideration. This includes things like your children's education costs, your spouse's retirement needs, or any other significant expenses that may arise in the future. Factoring in these expenses will help ensure your loved ones are financially secure, even in your absence. Lastly, don't forget to consider your existing assets, such as savings, investments, or any other valuable possessions. These assets can help offset some of your coverage needs. If you have substantial assets, you may not need as much life insurance coverage. To simplify the calculation process, you can use online life insurance calculators that take into account these various factors. Many reputable financial websites and insurance companies offer these calculators for free. These tools provide a good starting point for determining your life insurance coverage needs. Remember, it's always better to err on the side of having a bit more coverage than you think you need. Life is unpredictable, and having adequate life insurance ensures your loved ones are financially protected no matter what challenges lie ahead. Once you have a good grasp of the different types of life insurance and how much coverage you need, the next step is to start shopping around for quotes. Just like with any other financial product, it's crucial to compare quotes from multiple insurance providers to find the best deal. Don't settle for the first quote you receive. Life insurance premiums can vary significantly from one company to another, even for similar coverage amounts. By comparing quotes, you can potentially save hundreds or even thousands of dollars over the life of your policy. Fortunately, getting quotes has never been easier thanks to the abundance of online resources available. Websites like PolicyGenius, NerdWallet, and Insurance.com allow you to compare quotes from multiple insurers side by side without having to contact each company individually. These platforms simplify the process and make it convenient to find competitive rates. When comparing quotes, it's essential to pay attention to more than just the premium amount. Factors such as the insurer's financial strength, customer satisfaction ratings, and policy features can also influence your decision. Don't hesitate to read reviews and do your research on the companies you're considering. Another tip is to work with an independent insurance agent. Unlike captive agents who represent a single insurance company, independent agents work with multiple insurers, giving you access to a wider range of options and potentially better deals. They can help you navigate the complexities of life insurance and find a policy that meets your specific needs and budget. Remember, life insurance is a long-term commitment, so it's crucial to choose an insurance provider you trust and a policy that aligns with your financial goals. Don't be afraid to ask questions, negotiate rates, and take your time to make an informed decision. When choosing a life insurance company, it's easy to get caught up in comparing premiums and coverage options. However, one crucial factor that often gets overlooked is the financial strength of the insurance company itself. You're essentially entrusting this company with your family's financial security, so you want to make sure they're financially sound and capable of paying out claims when needed. Think of it this way: you wouldn't deposit your hard-earned money into a bank with a shaky financial history, would you? The same principle applies to life insurance companies. A company with poor financial health may be more likely to deny claims, delay payments, or even go bankrupt, leaving your loved ones without the financial protection they need. Fortunately, there are independent rating agencies such as AM Best, Moody's, and Standard & Poor's that evaluate the financial strength of insurance companies. These agencies assign ratings based on factors like the insurer's capital adequacy, operating performance, and ability to meet its financial obligations. AM Best is one of the most widely recognized rating agencies in the insurance industry. Their ratings range from A++ superior to D, poor. When researching life insurance companies, look for those with an AM Best rating of A or higher. This indicates a strong financial standing and a high likelihood of meeting their policyholder obligations. You can typically find an insurance company's rating on their website or on the website of the rating agencies mentioned earlier. It's a good idea to check the ratings of several companies before making a decision. By choosing a financially stable insurance provider, you can have peace of mind knowing that your policy will be there when your loved ones need it most. Remember, life insurance is a long-term commitment, and the financial strength of the insurance company you choose matters. Take the time to research and select a provider with a proven track record of financial stability. Congratulations! You've made it to the final tip, and it's an important one. Review and update your life insurance policy regularly. Life is full of changes. You get married, have children, buy a home, change careers, and these life events can significantly impact your life insurance needs. What might have been adequate coverage a few years ago may no longer be sufficient. For example, if you had a child, your life insurance needs will likely increase to cover the cost of their upbringing and education. Similarly, if you purchased a new home with a larger mortgage, you'll need to adjust your coverage to ensure your family can pay off the mortgage if something were to happen to you. It's a good practice to review your life insurance policy at least once a year or whenever you experience a major life event. During your review, consider whether your coverage amount is still adequate, if your beneficiaries need updating, and if the policy features still align with your needs. If you find that your policy is no longer meeting your requirements, don't hesitate to contact your insurance agent or company to make changes. You may need to increase your coverage amount, add or remove beneficiaries, or even consider switching to a different type of policy altogether. Another reason to review your policy is to explore potential cost savings. As you get older and your health changes, your life insurance premiums may fluctuate. It's worth comparing quotes from other insurers periodically to see if you can get a better rate. Remember, your life insurance policy is not set in stone. It's an evolving document that should adapt to your changing needs and financial circumstances. By reviewing and updating your policy regularly, you can ensure that your loved ones continue to have the financial protection they deserve. Thanks for watching. If you found these tips helpful, make sure to give this video a thumbs up and subscribe for more financial advice. Understanding life insurance is crucial for protecting your loved ones and securing your financial future. By following these 5 essential tips, you can make informed decisions about your life insurance needs. Leave a comment below if you have any questions or if there's a topic you'd like us to cover next. Until next time, take care and stay financially savvy.